Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick back with you this morning. We are on YouTube. We're working great. And if for whatever reason we get kicked off, we're going to go on Facebook. But we're all good right now. And we're all in a good mood. Talking about the biggest movers of the morning, Canada Goose, Abercrombie. We talk about the overnight headline we got from China. And a bit of a debate we got into that we'll probably start the show off with which is what time exactly does the market open? It's not as easy a question as you would think. So we'll break all that down for you. Today's guest, Mark Yesko, CEO and CIO of Morgan Creek Capital Management. He will join the show at 8:35. Joel, what is the word here overnight?
We got some red on the screen, Spencer. Any way you crack it up, SPOOs, spiders, or crude. We are trading down 18 3/4 handles at 27.86 1/4. The overnight high just above your closing price of 28.05. Your pre-market low 27.82. Folks, I don't have anything down here until you get to 27.55. And that was only an intraday low from March 11th. Don't think we'll see it today, but that's the next major support level. You have crude continuing lower here, taking out the lows from the last few days, down $1.63 at 57.51. Gold getting a little pop up 650 at 12.89. Silver in the green as well by 4 cents at 14.36. Bitcoin taking a little bit of a breather here, down $95 at 8,665. Triple D, how are you on this red morning?
Okay. I'll say I'm okay. I'm hedged in the trading portfolio a little bit to the short side, which is good for the trading portfolio. Obviously, the investing portfolio is never doing good on days like this. And you look and, I was nibbling in the portfolio a few days ago and, a couple days we went higher and I was like, okay, those are looking pretty good. Well, now we are breaching significant support. So, obviously I still think the wild card is, I think if we go down enough, Trump defends this market, but from a technical perspective, it does not look good. We got the 2-day move here, so some follow through from yesterday's wicked afternoon sell-off. Now on SPY, if you're looking at that, you had the low of the move, which was 279.93. We kissed it yesterday, kind of 280.13. Now we're breaking down through it. So now we open up a little bit. So concerning, and we've been talking about some certain stocks. And yesterday, if you had been moving all your money and playing defense into these defensive stocks, yesterday you were punished for those moves because those defensive stocks were anything but defensive yesterday. And we're talking about the utilities. We're talking about the Procter & Gamble's and the Coca-Colas of the world. Those things got hit hard yesterday. They were actually down much. Those were actually the leaders to the downside. Kraft Heinz, a stock that would not rally when other food stocks had been strong in the last month, leads the decline, falls yesterday almost $2, 7% out of the blue. I mean, there is some ugliness, not even just in the high beta names. It was ugliness across the board yesterday and led by some of these defensive issues.
Before we go into these individual issues here, we need to get a framework for a longer term wager here.
Uh-oh.
Yeah, and
Talk to me.
I don't want to sell in the hole here, but and there's a little caveat here.
Oh no, not a caveat too.
Yes,
What do you got? What are you gonna try to scam me on this time?
I'm not trying to scam you on anything. I just think that the old time, if we don't get a China deal, okay, and I think even if we get a China deal, I still think we're in trouble. But if we don't get a China deal, the all-time high is in. That's what I think.
Never going up there ever again.
Ever again.
This is like the ultimate all-time high. The markets, we're going to be in Japan, and we're going to be like 25 years later. And remember those days back in 2019 when we were trading up at 2,800 S&P? We kept banging our heads up against it and couldn't go up through it. We'll be talking like in 2040 and saying, man, Why didn't we liquidate everything back then and move it to cash or bonds or whatever else, or gold or Bitcoin? Maybe we'll be saying we should be moving it into Bitcoin. I'm going to take you on that wager and say the ultimate all-time high is not in. So I will say that we will one day, we might be like 90 years old, but one day we will hit all-time highs once again.
All right. And I said the only caveat I put in there that if a China deal's made. No, that I'm just.
If a China deal is made.
If a China deal's made.
S&P's out 1,000. Trump's like, I better start doing a deal.
What is it? I tell you right now, if I was the Chinese government, I wouldn't even, if the White House called, I would not pick up the phone. I would not do anything. And I would just let the clock go tick tock towards the election.
You know what the problem though is? Their stocks are getting hit harder than our stocks though because of this. I mean, it's ground zero for stocks like Alibaba, EEM. So, I mean, yeah, you can say that, let's play hardball, but they're getting hit harder.
Yeah, but I mean, yeah, but it's a totally different government. Okay. If you say something in China against the government, boom, you're missing.
You gotta watch what you say.
Yeah.
And apparently you can't say anything about Momo either, remember?
Oh, yeah, right. So I don't know. Listen, I gotta frame it up. I'm gonna wait for like the next time we come in, and hopefully we'll be up like 20, and you'll be like, oh, bullish and all-time highs, and talk about the stocks that you're buying, and I'm gonna say sold
to me.
Yep, that's what I'm going to do. That's what I'm going to do. In fact, I would go when we get back to 2,800, I'll go 20. You can take 2,950 because that's right up near the all-time high, and I'll take down $1.50. I'll take it down to 26.50. Again, that would be we'll set up the bet for the ages on that one. But yeah, I just feel. But let's talk about that. Kraft Heinz, it took out. I didn't look at that on Friday.
I got lucky to get out of it, and I think you still got it, eh?
Yeah, it's a much
along with Warren Buffett in the long-term retirement account. It's gonna be a while for you to get your money back on that one.
I'm gonna save it, so I could take some losses.
Maybe if it goes to zero, you can get ordered certificates and put them on your wall and say, hey, remember when we used to have ketchup?
Yeah. No. Who needs ketchup on a Beyond Meat burger?
Who needs ketchup on a Beyond Meat? Actually, I think there's an argument needing more ketchup on the Beyond Meat burgers, because if I would have smothered that Beyond Meat burger in ketchup, my 4-year-old might have ate it, and Beyond Meat might be making new highs right now.
It's getting close. It was trading up yesterday, but Kraft Heinz, what are they? They got earnings coming up, don't they?
I haven't actually been able to find a confirmed date for Kraft Heinz.
They're afraid to.
Maybe. I don't actually know when they're confirmed to report, because they haven't reported yet for the first quarter, and I don't have a confirmed date. I don't think they've even announced a confirmed date. If they have, I missed it.
The transparency is falling apart at Kraft Heinz for obvious reasons. It's not going to be good. At least the market thinks it's not going to be good.
June 4th.
June 4th.
That's unbelievable. You know what's crazy about Kraft Heinz too is the dividend is actually, and for some reason my system locks up right now. Dividend is back up to 5.54%. Didn't they cut it in half? They cut it, the dividend, but I think it's already climbing up unless my yield is no good here. Are you there?
Yeah. No,
I'm trying because my internet's doing buggy things here right now. Okay. So anyways, I'm trying to grab, I believe it's like both systems I have say it's got a 5.54% dividend or yield at this current price. And they cut the dividend. So it's fallen enough that the dividend is starting to actually get higher again. Are they going to cut the dividend again?
Yeah, 5.5% is accurate.
I'm scared they're going to cut it again. I got lucky to get out of this because I stuck this. I label it long-term portfolio, and I bought it. Me and you bought around the same time, around 60.
Yeah.
And then it had that pop. Remember that one day pop, 10% one day?
Yes.
And I'm like, this is ridiculous. It's too big of a pop, too fast. I'm like, I'll rebuy it sometime. So actually, this was one of the cases where I cut bait and didn't throw my line back in the water, and it helped me. It's all these times where I cut bait and then throw my line back in the water, rebuy the stock, and then it continues to go down. So in this case, it actually worked out for me. This and U.S. Steel. So I sold that $44 in U.S. Steel, and that thing goes down every day.
That was a long time ago.
Do you see U.S. Steel now too? Tangent City here, but X is under $13 here this morning. At least offered a 13. Is this, like ever going to go up?
Yeah.
This is crazy.
The tariffs tariffs are great for that.
The tariffs are great for U.S. Steel. Trump, this is doing really well. Look at how well U.S. Steel is doing with these tariffs.
Protecting our hidden gems, our resources here. But let's go over some individual stocks. You want to go over some of those defensive stocks that got?
Yeah, you know what? Because it was a hit. So Procter and Gamble, that was one that just stood out. And these things have been holding up well. And people, money managers have been moving stuff and saying, okay, I'll be happy to pay a P at 27 for Procter and Gamble with no growth because I know in the event that the market starts, really getting ugly, that it's going to hold up better. Not yesterday. I don't own any of these stocks. The reason I don't own any of these stocks is there's no the valuations. I mean, you're paying what PG's, P's 25. Yeah, you get a 2.8% dividend. The stock in 1 year, has climbed from $75 to 107. The stock doesn't have any growth. I mean, this is just, it's overdone. These things, I don't think it's worth 107 bucks. I'm interested down in the 75-80 area. It gets back down to there. That's maybe where I'll re-add it to my portfolio. But I don't know. That Procter & Gamble, J&J got hit a little bit there yesterday. Coca-Cola got hit pretty hard yesterday too, at least for Coke. The utilities, this is a shocker too for a lot of people because the TLT was strong. Typically, XLU goes up with the TLT. Now yesterday, a stock is a stock is a stock, and they were hitting the utilities hard yesterday. XLU straight down. XLU was down more than the banks, and the TLT was up.
Yeah, a lot of disconnect here, huh?
It was just everybody, they wanted to sell stocks yesterday. And that's what we say is that's a little bit of the fear there too. Because we've been saying there's been rotation and there's going to always be something that's going higher. It was not the case yesterday. It wasn't rotation station, at least in the afternoon. It was let's sell stocks. I was looking at my screen. The only stocks that were really strong was the payment stocks because we had that deal. Square was still trading higher. I saw Visa and MasterCard, I believe, close green. The payment stocks were kind of holding up, but really it was kind of ugly across the board.
All right, let's just take a quick look. Review the stocks. Procter & Gamble trading down in the pre-market, down another 85 cents. A good level. Let's see what happens here in the, looks like 103.5. That's currently, we're trading just above that area. I see some daily lows, 103.78, 103.92. Better hold on here. Better hold on right where we're at. I'm looking for easily under 103. I see a pair of lows just called 102.69, but that's looking at Procter & Gamble. I'm just looking at daily lows here for Coca-Cola trading down another 15 cents. I think you got to look at 48.45 is your next stopping point. Kraft Heinz, I have absolutely no idea where this thing, it's already trading below yesterday's low. And then to just bring up the daily of the Kraft Heinz here, because here's a scenario where you had the big boys really defending 31.50. You see all those 31.53, 31.64, 31.71. And then on, what was it? It was on Thursday, you took it out. You went down to 31.20, and these guys are scratching their head. Closed at 31.45. So maybe there's a chance that we can, get over that area. Next,
I just think everybody who's been accumulating it for the last 3 months at 31, 32 bucks is now underwater, and they will be such willing sellers if we ever get back up over 30. So I think the path of least of KHC is actually much lower. I hate this chart.
Yeah, it's terrible. And I don't know.
I mean, valuation, dividend, yeah, that's all attractive. But when you're out of favor, you're out of favor. And you know what? Kraft Heinz, I believe, isn't it a debt issue? I don't follow the story close enough, but I think they have a lot of debt, don't they, Spencer?
They do have a lot of debt, yes.
Debt, accounting.
That's not what you want to have right now, is a lot of debt. I mean, there's issues there. So, I don't know why that, all of a sudden it's not working. But I mean, interest rates went up a little bit there. You wouldn't think it would collapse it like that, but maybe there's other issues. The other issue too, with all of these packaged food companies, like ketchup aside, they have a lot of other stuff that Kraft Heinz obviously does too. I mean, they're the whole Kraft side. Millennials, younger people, do you think they're eating as much packaged foods? I think it's like this, like you think about Whole Foods, or you think about, when I grocery shop even, like I do what's called perimeter shopping. Like I go around and I buy all the fresh foods all the way around. I hardly ever go up the middle aisles and buy like these pre-packaged foods. So, maybe it's because I'm older and I'm trying to be more health conscious. Maybe the young people are still going and buying the Kraft dinner. but I think it's just a health thing where people aren't buying as much of these prepackaged foods that sit there on the shelf for a year. And, I think that doesn't bode well for the company long term. So I think, I don't know if there's an argument there or not, but, maybe people are still eating the Kraft dinner. My kids like the Kraft dinner. We feed to them every once in a while, but I never eat that stuff.
Oh, it's total. I mean, Lisa's kind of converting me over to this vegan diet here, and the farthest thing away is
Beyond Meat.
Yeah. We bought it. I mean, it was okay, but but she's more into. I mean, there's a company. What's the name of it?
BYND.
No, Purple Carrot. Purple Carrot. She wanted to try it, and it's just all vegan food, vegan recipes for Mother's Day. I got her a vegan cookbook, and my girls, without consulting with me, got her a vegan cookbook too. So she got 2 vegan cookbooks, and she just, that's her specialty. And she's just like, people got to eat better. And I think that's what's weighing on these stocks.
I think so too. And you think about this, and you actually have a note from Goldman here today too on General Mills, and they're downgrading it to sell. And this ties right in too. I mean, GIS has actually held up and actually performed pretty well here. GIS is saying, don't believe it. They put a sell on it this morning, and they slap a price target of 41 bucks on the thing. So stock is trading down here in the pre-market too. But I think you look at, the trends. I think people are eating healthier. And beer guy in the chat saying processed food is out. I agree with them. I think, these pre-packaged foods that are sitting on the shelf for years in the middle of the grocery store aren't getting bought as much as they used to. There's always going to be consumers of those products, but I think those consumers aren't as high in number as they were in the past, as people who are being more conscious of their health.
I'm always hesitant to paint broad generalizations like that with regards to generational taste, because people like what they like, right? I mean,
okay.
Kraft Heinz also owns Maxwell House, the coffee,
which is terrible.
Okay, but people still drink coffee, right?
Well, let's go look at their businesses.
I've got. They own Planters.
I look at it too.
They own Planters. People still eat peanuts. Last I checked.
I'm allergic to peanuts.
As am I.
Well, why is the stock?
Other people eat them.
Why do I own this stock?
Other people eat them.
Why do you own this stock, Joel?
No, but people are. Could you make a case that packaged foods are out more than the past decades? Probably, I suppose. And
all it needs, you think about how tight some of these margins are, and it's the same thing like we used to say with the autos. If sales fall 10%, the margins are so tight for some of these companies that's the difference between making money and losing money. So it's not like you have to lose 80% of your business to go under or to have serious problems. You lose 10% of your businesses in some of these cases, and you got serious problems. So I'm making the argument that, hey, maybe there's 10% of the consumers that were buying Kraft Heinz and General Mills products that might not be buying them as much in the future, and that does not bode well. That's my argument.
Maybe they're just spending their money in other ways, like at fast casual Chipotle's and noodles and et ceteras of the world.
I think they're just buying foods that are better for you, like healthier for you. And maybe it's because I'm getting older though. So maybe it's my selective perception, because I don't want to eat that stuff, this prepackaged stuff, because I know it's not good for you. So, and I'm trying to eat healthier as I'm getting older. I don't want to die when I'm having a heart attack when I'm 55 years old because I ate a bunch of garbage.
Well, you ate it when you were younger, and there's a funny.
Yeah, I know. So I got to make up for it now.
My point is, there are still young people, like people that ate it that were your age when you ate this stuff, right? Those people exist now. There are college people, right, and young adults who eat this stuff.
But why beyond? There's people who are going beyond meat. I mean,
you aged out of it doesn't mean everyone else aged out of it.
But again, I'm not saying everyone. I'm saying maybe 10% less people is all it takes. Joel, you're listening on the side here. Can you?
Yeah,
I don't think you need everyone to stop eating these things for these stocks to be in trouble. I think you just need 10 or 15% of people to start saying, hey, I'm going to eat less Kraft dinner, and I'm going to eat more, fresh food, or maybe make my pasta, or maybe, do, myself, because it's healthier to do it that way. I think if 10 or 15% of people start doing that, I think these stocks got major trouble.
A lot. Just the other, we're going to move on from this eventually, but look at McDonald's though. I mean, that's kind of bucking the trend. Is that just, who's eating all that McDonald's?
You want to know something though? I can go to McDonald's. Their salad is excellent. I eat that salad. Maybe it's not good for you, but the salad is excellent. That dressing they've got going there,
right.
I don't know what it is, but I was like, this is one of the best. It sounds good.
All right, Dennis. You know, why don't we save us time? Why don't you write down a list of every place that you like, and then we'll just buy those stocks, and everything you don't like, we'll just sell those ones, and then we'll call it a day.
It's fine. All I'm trying. Okay, so we'll go to your argument. If everybody's still buying Kraft Heinz, why is the stock at $28?
Dude, I don't know.
I'm giving the argument of why this is happening. So you've got to give me the argument on why it's going to go back up now. Because I don't think it's going back up, because I don't think consumer tastes are going towards that. I think they're going away from that.
They will.
That's what I'm arguing here today.
They will incorporate their brands into Blue Aprons and Chipotle and etc.
Better do something. Or
something.
they better just start selling a lot more ketchup, because this stock chart is ugly.
All right, let's go to Abercrombie and Fitch here, because
Before that, Model E's, I got one story here, because Spinner was saying, why is Model E's doing so well? They sell Oreos. They sell those wasabi Oreos, Spinner. Did you see Kramer last night? Did you see Kramer?
No.
Okay, so this is funny. I was actually tweeting with him, and he actually tweeted back at me. So I was like, oh, Jim Kramer tweeted back at me. But anyways, he's on, and he's just finishing the show, and he had Model E's CEO on last night. And he's finishing the show, and he's got an Oreo in his hand. He's like, oh, wasabi Oreo. And it's like a minute to go in the show. And he takes a bite. He says, not bad, not bad. And then like 5 seconds later, he lets a little cough. And then he starts coughing. And then he starts coughing like he's like gonna die on the show. And then he's like, oh, he's like this market, it's gonna get a lot worse before it gets better. And then he's coughing as he goes off on the show. And then he tweets out afterwards. What did he tweet? It was he tweeted a bunch of things. He's like, my stomach is in serious problems from this wasabi Oreos.
Is it really such a thing?
Oh, I've never had them. It must be really, because you could tell it was real too. He's like, not bad. And then 5 seconds later, he coughs a little bit. And then within a minute, he could barely breathe.
I love wasabi. I love it with that.
You'd like those wasabi Oreos, then you'd be able to take that
I don't know
down.
about.
I do the same thing, Kramer. If you're listening, I do the same thing. I know. If I had that wasabi Oreo, I'd be coughing for 2 days.
All right, let's let Spencer take over the show.
Retail, Abercrombie and Fitch and Goose. So we'll do A&F first. Earnings this morning: Q1 EPS a 29-cent loss versus a 44-cent loss estimate. That's a beat. Sales of $734 versus $733 million. So all in all, a good first quarter. Q2 net sales that they gave guidance-wise, they guided flat to up 2%. For the second quarter. Fiscal year net sales, they guided up 2 to 4%. And I guess that's not good enough.
No. So which one do you want to go to? We're going to
A&F.
Abercrombie. Did you want to do Goose too? Want to do them together?
Okay, do them together. While we're at it. Canada Goose also reporting this morning here, Q1 EPS 8 cents a share, which is actually only up a penny on a year-over-year basis. Sales 156 million Canadian dollars, which is up about $30 million on a year-over-year basis.
You have one level on Goose that is of the utmost importance. It's the low from December 28th of $40.19. That's the low it has to hold. If it does not hold that, the story is over, and all those Canada geese that are on my lawn at my cottage are not as rare as everybody thinks. We've been talking about this for a while. I mean, it got silly, I think, when it was getting up to 70. This story is close to ending if it's not already ended here today, but under $40, it's ugly.
Have you ever?
It's already ugly. It's down 17%.
Yeah, it's and just hanging out near the lows of the pre-market session, down 812 at 40.90. We've come this far. Why not test that level at?
Sure.
Woo, boy, what was that?
Good.
It was Dennis mentioned 40.19. After that, say hello. You got some work to do in the 30 handle. Your May of 2018 low was 35.78. I don't think we're going to see that today, but might get a bounce off 40 the first time. But sure looks like we're going to go down and test that level. Have you ever tried those coats on? They're winter coats. They're just too warm. They're too thick.
They're good for Canada.
And
they're good for if you're living in the far north and you have, winter in 10 months of the year. But that's the idea, I guess. Really gets cold. If you believe in global colding, I guess, Goose has got a case.
Yeah, I don't know. 40.19, trading 41.19. That's your target on the downside. If we do rally, since we made that low, you found sellers at 43.5. That's $2.50 away. Abercrombie and Fitch gapping into a gap area. You have to go back to 2018, and you had a low in December of that month at 20.05. Your current low pre-market 20.03. Big psychological level to hold. $20, 41 cents away. After that 2040 low, start to work into the 19 handle. 1994 was your low in February this year. And then I'd be looking for 18.5. That was your January 2019 low.
Retailers just are not having a good earnings season, at least so far. We've saw Kohl's. Look at Kohl's since its earnings report. If you're thinking about coming in and buying Abercrombie on the first day and saying, well, it's down 17%, it's going to come back, look at the chart of Kohl's. Kohl's was down after the reported earnings, $7. It's fallen another $7 since then. So, or $6. It's fallen $6 on the earnings. It fell another $6 since then. So we've seen this again and again. When you're out of favor, you're out of favor. When you report disappointing earnings, you stay out of favor, sometimes for a while. I don't think you need to be a hero. Could it rebound eventually? Sure, everything bounces eventually, but at what price? So the only thing good for Abercrombie, it is coming into that significant level of $20. So, you're 50 cents away. I think why not test that, right, Joel? Like you've come this far. I would think, it's almost like it's more fun to it's probably an easier trade, believe it or not, to short it at 20.68 and cover it 20 for 70 cents, because in all likelihood, you've come this far. I think you're going to probably test the 20, especially in this tape when they're selling everything. But, you got a big level there, but stocks stay out of favor for a while when they're out of favor. I mean, Nordstrom, you can look at that one there too. They obviously knocked that down. It's been down for 3 days since. It's the argument against buying Goose here too. But both of these stocks, the only thing good for them is they are coming in major supports. Goose at 40, Abercrombie at 20. Let's see what happens at those levels. But hard, as a day trade, maybe you get a bounce. Hard to jump in these things and say, well, this is going to be the long-term bottom here, because we haven't seen it happen in the other stocks.
What about Triple M?
Triple M is chaos since its earnings report. Look at this. This goes down every day. At Triple M reported the disappointing earnings, which it had been trending up into it. Obviously took everyone by surprise because it was, did not sell off ahead of the numbers. Was down 20 points that day. And since then has fallen another 35 points. That's incredible. It was down again $3-4. Triple M goes down every day. 3.5% at a certain point in time. We said this even was like 170. At a certain point in time, it'll be cheap enough where valuation maybe makes sense. But I also said, let's wait till it stops going down. Let's wait till it starts to form some type of a bottom. Let's wait till we have a tradable bottom here. We don't. It just keeps falling every day. Trade war too here with Triple M is not helping that. But that being said, holy cow, is that an ugly chart?
Yeah, and trading lower today by 75 cents right now. Pre-market trading 162, not quite down as much as the overall market, but it's been beat up. 157.61. That was your March of 2016 low, so that's $5 away. We'll see if they can find monthly low coming up to 160. But yeah. New low for the move yesterday as well. So we covered, some ugly stocks. Spencer, do you have anything positive? Is there anything trading up this morning?
Well, Momo was up last I checked like an hour ago, but or no, not YY, not
YY.
Momo was yesterday.
YY gave it back though, a lot of it.
Yeah, YY had earnings yesterday, and I guess they're okay because the stock was up like 4 or 5% last I checked. Still up 4% this morning. The EPS was in line. The revenue beat actually for the first quarter in YY. But outside of that, I don't have too much else.
What about the crazy stock of the move here? It's getting mentioned. SOLY.
Yeah, it's up 40.
What everybody likes to talk about is these little crazy stocks.
Yeah, I don't know.
Hardest stocks to trade, guys. I know you can make the money fast, you can lose it fast.
Yeah.
No stock, in my opinion.
Yeah.
They had some positive news from the FDA, but that's all I can tell you about this one.
Yeah, I mean, you got a stock that trades low volume, has a big volume day yesterday. Actually, someone got the memo back on May 16th when it traded 1 million shares. It was down $3. on May 16th, and then the value really picked up yesterday. I can't give really any levels in this. I would just say sell it when it's going up, and I don't know where the top is or where your target is, but sell it when it's going up, because when it starts going down, there ain't going to be no bids.
Well, and okay, so this is a low flow play, but they did have some good news. So it's not like it's just out of the blue. Sometimes you see these moves just out of the blue. They don't even have a catalyst. So we had a catalyst, at least in this case. But yeah, these things typically end ugly. I mean, is this going to, I don't know the path to get there. We always talk about this, but we see these things have these crazy moves. And then, all of a sudden it starts to, you get a big down day and then people caught, and then it just kind of seems to just leak, and eventually sometimes gives it all back.
Right.
I don't know.
Joel, in part to us what you know about modern tattoo culture and this company. No, what is this news? Or
the
what
companies
that isn't it tattoo removal or something?
And what do you know about that?
Zero.
Yeah, I got like 4 or 5 tats that I need to get.
Oh yeah, I have tattoos all over me. I need tattoo removal.
Girlfriend. I mean, I really would like.
Spencer's in an argumentative mood here today, but we're just saying when you're chasing moves, go ahead, chase it, Spencer. But when you're chasing moves, stocks go from 6 to 12 to 18 to 20. Sometimes they go to 30. They keep going. But if you're caught, it's like a hot potato. And it's great to keep passing around and keep making money. I mean, if you're making money on it, awesome. But eventually, usually on these moves, people get burned. So I'm going to say, and you can write this down or you can tape it, I think the stock's under $10 within 2 months. And in all likelihood, it might be under $10 in 2 days. So I'm not coming in here short at 20 because it could go to 30. So I'm not putting my money where my mouth is on this, but usually longer term, these things tend to give it back. So I'll give myself 2 months. Say if you're buying at 20, I think it gets halved at least within 2 months. That's my opinion.
All right, 8:32 here. We're gonna grab our guest today in a couple of minutes, Mark Yusko. In the meantime, Dennis, any imbalances this morning?
We have one breaking news. NXPI to buy Marble's Wi-Fi connectivity in a deal for $1.76 billion. MRVL is trading up 65 cents here on this news. That's just breaking here right now. So just want to give you that. NXPI is trading slightly in the red on this. So MRVL getting a little bit of a lift as they're selling their Wi-Fi connectivity business, I guess.
All right.
Balances?
Yeah, what do you see? I mean, they're selling balances.
Low. Right? They're low. Johnson 50. Okay, so Johnson 50,000 to sell. We've been talking about, the defensive trade not being so defensive. That is being seen here this morning as we see more selling balances. But yeah, they're all selling balances across the board. They're fairly small. Again, if you're an institution, you got a big chunk to sell. You're not showing it at 8:30 in the morning. So those are going to get bigger as long as we stay down.
Just quick, we got a question here. Levels on Tesla, and you're looking at it. Actually, it's below the new low of the move. Low of the move was 186.22. You are trading down 270. Is that just trading down for the heck of it, or is there some news on it?
Probably market. So down with the market. It's got a bigger beta, and it's completely out of favor. Broken story right now. I don't know what turns the story around, but it needs a catalyst to turn it around. Hard to get interested in Tesla until it can get over 200, and also hard to get interested in Tesla until you have a catalyst. Some analysts come out defend it. Musk says something. It needs some type of catalyst to kickstart it. And that has just not been the case for Tesla here.
2 monthly lows in Tesla, and we talked about this with Jeremy a while ago. Your November 2016 low, 178.10, and then your December low in 2016 was 180. So, split it, 179. First time down, should get a little bounce, but there's your next support area, those 2 monthly lows from the end of 2016. Spencer?
Yep, I do want to bring on our guest right now, Mark Yusko. He is the CEO and CIO of Morgan Creek Capital Management. Actually hasn't joined the show for a minute, so it's nice to get him back. Mark, let me see here. Mark, are you with us?
Hey guys, how you doing?
Good morning. How are you?
Doing great. Good morning.
How's it? Wait, it's been a while since we spoke. How's it going?
It has been. It's going well. It's going well. It's summertime here in North Carolina, so we went from winter to summer. Forget spring, but I'm not going to complain about that.
All right, so let's get to the markets here. Before we get to the markets, just want to talk a little Bitcoin with you. You were are one of the bulls here in Bitcoin, and
Yep.
we've had a nice rally here. I mean, it's been all over the place, but just talk about, what are the catalysts here? You think it's a nervous market? Do you think that it's people are finding actual true value in it, even though we can't identify the true value? What's the catalyst for this Bitcoin rally?
Look, I think the bottom line is fundamentals rule. In fact, I'm doing a webinar tomorrow on this whole idea that fundamentals actually matter, and that all the momentum and sentiment is really not where people should be spending their time. And I love the discussion you guys were just having about some fundamentals about companies. And Bitcoin's a really interesting thing in that you mentioned that there's no underlying value. Well, there actually is. I mean, it's a network. It's actually quite easy to value using Metcalfe's law. And there was a time back in 2017 where the price got much higher than the inherent value of the network. And we told our friends and clients and everyone who would listen that at $20,000 it probably had at least 50% downside. The problem is price is a liar, right? The price of anything is just what two people will exchange that good or service for. But it really doesn't have any information content on the underlying value. Value is value. And value can be discount stream of cash flows. It could be the value of the network and how it's growing. But it really isn't equal to price. And so people focus on price way too much. And we'll make the argument that the reason Bitcoin prices are rising today is that for the last year in the price bear market, there was a massive bull market in fundamentals. Record numbers of wallets, record numbers of transactions, number of transactions per block, all of the fundamental metrics that show you that the network adoption rate is increasing, were all rising. And now the price is rising to match. So that's interesting.
Dennis, wait.
I just want to expand on that.
Dennis, real quick. Before you go, Mark, can you just tilt your camera out for a second, just so we can get your full face in the frame? There we go. Perfect.
All right.
I'd love to hear this, how you value this network, because I haven't heard that argument before. I mean, I've sat here and and argued I can't figure out how to intrinsically value it, so that's why I don't trade it. I believe it's not zero. I believe there is something to the Bitcoin network, as you're saying, but I have no idea how to put a value on that. So enlighten us. This is an argument we'd love to hear.
Yeah, look, networks are really interesting things, and the value comes essentially, as I said, following Metcalfe's law, and it's inverse to the square of the number of participants in the network. So as you think about Bitcoin as a network, so there are a number of fundamental metrics. There's the number of users, right? There's a number of people that are actually using the trading mechanism. And there's the use cases, right? There's store of value, the people that buy it and hodl it. They want to store value versus people who want to use it to buy things. We just had the 10th anniversary of the pizza guy, and everybody's giving him grief because he, bought 2 pizzas for 10,000 Bitcoin. Well, that was the whole point in the early days, was it was supposed to be digital cash. And as different use cases evolved, particularly store of value or digital gold, the number of users and the types of users changed. So we can actually measure how much capital, how much fiat capital is converting into Bitcoin. We can measure how many people are using the system and the network on a day-to-day basis. We can look at the different use cases. We can look at the underlying protocol layer and how it's being built upon in other layers. So there's lots of different ways to value networks. Amazon is a network. It's not a real company in the sense that, what do they actually do? They don't manufacture products. They actually don't really do anything except be a search engine and connect buyers and sellers. But they're a network. The more people that use it, the more valuable that network is. And it's just one way of thinking about how network systems are valued.
So how do you have a value that you've come up with, like crunch the numbers, or is that the secret sauce and we have to be a subscriber?
No. Look, there are a lot of different people have different. So, we we look at the underlying value is somewhere in the, low double digits. So $12,000-$13,000 per unit. There are others that are a little higher than that, 14,000-15,000. And it's an inexact science, right? And
sure.
part of it also has to do with your assumptions. Everyone has a different assumption for decay, for the number of people that use the system and then go away. There's different variables related to, how many transactions are actually real transactions versus some of this data that's come out about spoofing transactions. And that's true with any newly formed network or smaller subsystem. So, whether I don't put so much credence on the exact number as the relative level of the current price to that number. So today we think the price is below fair value, and we think the fair value is rising. Therefore, we're buyers. And we have a fund, and that fund focuses primarily on infrastructure, so venture capital around the system. But about 9-10 weeks ago, we started buying Bitcoin because we do think it is a company, it's a network. And so we made an acquisition at very nice prices in the 4s, and we think that'll be a good long-term investment, a good long-term hold.
Mark, what about the energy argument here? And I've given this argument in the past, and my wife hates Bitcoin for this reason, is that my wife's big on global warming and trying to help the planet. And when she thinks about, and obviously we don't do it, and she's not done a lot of research, and neither have I, to look at it. But when you hear about using $5,000 in energy to mine a Bitcoin,
it's FUD. It's totally
seems
wrong. All the stats that get, it's FUD, fear, uncertainty, and doubt. If
Okay.
your wife cares about the environment, and I'm sure she does,
Yep.
then she should be the biggest proponent of Bitcoin on the planet.
Great. Give me this argument.
No, here's why.
Yep.
So here's the thing. Bitcoin uses far, like orders of magnitude less energy to create value. Everything that we do in our life, right? Every single thing we do in our life, what we're doing right now, we're converting energy to value. We're using energy to power our computers and our systems and our telephone, and we're creating knowledge, right? And that knowledge is a form of value. Everything we do in our life converts fossil fuels to value. That's why we are advanced human beings today, and we're not living in caves like we were 10,000 years ago. So everything we do, that's the whole purpose. Now, what's interesting about that is we take things for granted. Like, say, gold mining. People think of gold. It's very valuable. It's been money for 5,000 years. It takes 60 times more energy to mine gold than to mine cryptocurrency. 60x. Then let's look at banking. The banking system, the global banking system, which again is being disrupted by cryptocurrency and replacing fiat currency over time, uses 2,000 times more energy. Now,
how do you get those numbers? Where are those numbers derived from?
There are a lot of people who have done work to quantify. Just think about the banking system, right? You have physical branch. When was the last time anyone was in a physical branch? I haven't been in a branch in 10 years. Why do they even exist? Why do we need branch banking in a world of digital assets? We don't, but they still exist. Why do we need giant skyscrapers in New York for Bank of America? We don't. So all of that is legacy system and the infrastructure. There are 7 accounting systems to do banking. 7 databases, 7 accounting systems. We don't need any of that. We can use it all on the blockchain, one accounting system. So the numbers, whether it's 2,000 times, 1,000 times, 1,500, doesn't really matter. The point is much greater energy usage for the banking system than cryptocurrency. Now, the last point, the great thing about cryptocurrency, the energy that it uses is energy by and large that was going to waste and is the most renewable energy around the planet. Most cryptocurrency is done with hydro. That's the majority of it. And that hydro energy would have been otherwise wasted. It also constantly searching for the lowest cost energy. The reason I actually got into this business in some ways is because I met a partner who got into this because they take old tires, they thermally demanufacture them into their component parts, oil and steel, and they get electricity. They were selling that electricity into the grid, so they have negative cost electricity. Now they use that electricity to mine cryptocurrency. That's actually awesome, converting old tires, hazards, waste into energy to mine cryptocurrency. The other one I love is down in the Permian Basin. Here's why your wife should love Bitcoin. So in the Permian Basin, they generate tons of gas. They don't have any pipelines to use the gas. So what do? They flare it. They burn it into the atmosphere. Terrible for the atmosphere, for the environment. So what did people do in Bitcoin? They said, hey, I can take a microturbine, I can attach it to that gas, and I can create Bitcoin mining infrastructure and save that gas from being flared into the environment. That's a negative cost. So you're converting negative cost energy into capital, because you have to pay people to take that gas away, and you're saving the environment. Awesome.
Great arguments there, Mark. Appreciate all that too, because I haven't heard some of those arguments before. My last question, and then I'll throw it back to my to the other guys here. And maybe we can change the subject from Bitcoin. Just talking about. Now I lost my train of thought here.
Scarcity.
Well, I want to ask scarcity too, but so it's actually, I guess I have two questions here. So one was, I see this argument about scarcity all the time, that there's only going to be 21 million Bitcoins and everybody's going to want to have one. But the thing is with Bitcoin is it's a unique item because it can be subdivided and still have the same usage. So my argument, about the scarcity, I don't know if I buy that one, and maybe you can talk me into it, is if something can be infinitely subdivided and its usefulness doesn't subsequently diminish, then is it truly a scarce resource?
Oh, absolutely. It's a really important question and a good question, but it absolutely the case. Look, the total volume of currency of Bitcoin, right? 21 million entities. So one Bitcoin will always be one Bitcoin. Now it can be divided into Satoshis, 8 decimal points. So you can get hundreds of billions of individual units, but the total value, again, of the network is what it is. The amount of fiat that's converted into that network is a fixed amount. So it's not like we can suddenly double the amount. So once we convert fiat to crypto, and so let's just use a number. Let's say we have 8 trillion. So it gets to gold equivalents, and there's $8 trillion of value. Whether I can exchange, $1,000 units, $100 units, $10 units, dollar units, or 10-cent units doesn't change the fact that there's $8 trillion, and a central bank can't come along tomorrow and say now there's 16 trillion or 24 trillion. And that's why, think about the lowest price you remember. You guys aren't old enough. I'm old. Think about the lowest price you remember for buying gas, right? Mine was 33 cents. 33 cents. That's just insane. It's the same gallon of gas. It produces the same amount of energy. Yet today, I got to go pay $2.80 for it. That's because central banks rob us of our wealth through the stealth tax of inflation. Can't do that with fixed rate currency or fixed supply currency, scarce asset.
Okay, last question. You're doing a great job here too, Mark. Last question. Last question is, what happens? Okay, so once all these Bitcoins are mined, and obviously I'm not closely following, so I want to ask you, once they're all mined and we have the 21 million out there, what happens after that? Like, you don't have miners coming through and obviously mining and going forward. Like, how do they verify the transaction? How does all that work after all the Bitcoins are mined? Such
an important question. And look, the genius of Satoshi Nakamoto, and whether that's one person, I actually don't believe, because no one could be this smart. The genius of the system was having an incentive system in place that did two things. One, it ensures that you'd never attack the system, right? Everyone says, oh, what about an attack? Well, no one would attack the system, because then the value of your incentive, the actual Bitcoin themselves, would go to zero. So it's this perfect incentive system to match the miners, which are basically people who use computing resources to secure the network, and they are incented by these awards that happen every 10 minutes. Now, to your point, once we get to the 21 million that are mined, you say, well, then what happens? You're not going to get any reward for donating your computing resources to the network. Then what we'll do is we'll go to transaction fees, and there will be actual transaction fees. So everybody today, I can transfer Bitcoin to you for zero. But I would say zero is the wrong number, right? If I want to transfer money across international borders, Western Union charged me 12%. Bitcoin can do it for zero. Zero is the wrong number. 12% is the wrong number. but maybe 1, 2, 3% is a better number. So transaction fees will pop up, and that's not till 2045, I think, is the final. I think I'm off on that date, but it's around that time. So transaction fees will then become the incentive system, because incentives are critically important to securing the network. But it's a great question.
And what about, large transactions? If this is supposed to be a currency, a major currency, I mean, come on, you have $35 million sales moving this thing. What do you think about the illiquidity here? And if for it to be a major currency, it's going to have to absorb a lot more, have a lot more volume. So just to touch on that.
No. So the U.S. dollar was created in the late 1700s, right? And, it took until 1944 for it to become the world reserve currency. That's a pretty long time. And, people have these expectations that a 10-year-old invention should suddenly be, equivalent to the global world reserve currency. That's just crazy. And I always use the example of potential versus capacity. What's the capacity of a 10-year-old kid? What was LeBron James as a 10-year-old? He actually wasn't really that special. Now, what was his potential? Huge. How much would you pay to own that potential over time? I paid a lot of money. I mean, the guy is amazing, worth multiples of billions. So the potential to capacity of Bitcoin as a currency is really huge. The capacity today is not that big because you had to make a decision with Bitcoin as a use case, or as a functionality. You had to decide between speed and security, and you can't have both. It's like good, fast, and cheap. Pick two when you're building a house. You can have a good and fast, but it won't be cheap. You can have a good and cheap, but it won't be fast, etc. So you have to sacrifice either speed or security. And what Bitcoin decided was it was going to be the most secure computing network in the history of computer networks. Sub 1% downtime, never had one fraudulent transaction. How many Visa and MasterCards we all had to get because of fraud? So they sacrifice speed. And so what we need is a second layer technology, which will be developed like Lightning Network or something else. And that second layer, the same way that we don't actually have money in our Visa card, right? Our Visa does a transaction, it happens instantaneously, you do millions per second, but that's not actually a transaction. There's no exchange of value. What it does, it makes a ledger entry, and then you pool all those ledger entries, and then they settle up at the end of the day or the end of the week or whatever. I don't even know how the back office works, but the key to Bitcoin is it will evolve over time as the use cases progress. Today, store of value is the primary use case. There will be use cases for exchange value, and it'll never be a world reserve currency until we get larger, to your point, larger volumes possible. But that's, years away.
Real quick, before we let you go, we're on the line with Mark Yusko of Morgan Creek Capital. Overall market thoughts here. I mean, the tough question here, but the bond.
Oh, it's not a tough question at all. You guys know how I view about this. I've been talking about it since January of last year. I thought that the markets would peak around 2,800. Actually, in October of 2016, we were off by 4 months. We got to 28 something in January. I think that's when the bear market really started. We got a little false peak back on September 21st, and we started down, and we were well into the beginnings of the bear market. And the plunge protection team came along on Christmas Eve and triggered this short covering rally. We have the lowest number of shorts in the history of markets. Crazy. So we've squeezed all the shorts. And look, bear markets, according to Bob Farrell, have three phases: sharp down, reflexive bounce, and then protracted downturn. And that's exactly where we are. We had the sharp down, we had the reflexive bounce, and now we're starting the fundamental protracted downturn. And I say it's just like 2000, 2001, 2002. So last year was like 2000, down single digits. This year we'll end up down, double digits, somewhere in the teens. And 2020, like 2002, will be the really bad year. That's when all the debt crisis will start, and the debt will start to blow up, just like it did with Enron and WorldCom. So I think we're in for a 40, 50% drop over the next year and a half. And people who think we're going to get a big bounce. You guys were talking about Tesla. Tesla's going to zero. The equity of Tesla is worthless. If you want to own a Tesla, buy the bonds and you become a new equity owner later.
That's good. You could be right. You're looking right on that one.
Some bold calls.
Long crypto, short the world.
Absolutely.
That's
absolutely.
nice spread.
I'm scared. I'm scared now. You got me
There's
scared
lots
here,
of stuff
Mark.
to do. There's lots of cheap assets. Chinese equities are really cheap. There's some really interesting things around emerging markets. Everybody's worried about emerging markets because of strong dollar. We think the dollar actually will get less strong as people realize that, we're fighting the wrong war. We're like this trade war thing. China's playing Go. We're arguing about how to set up the checkerboard. They're playing a totally different game. They're kicking our butt. It's not close. And they have good leadership. We have bad leadership. It's just on and on and on. But I've gone over my time. I appreciate being with you guys this morning.
Mark.
Never afraid to give your thoughts. We appreciate that.
We love you, man. And that's what's important about, our show is like we bring people on, we give them time to express their opinions. Not everyone agrees with them, but no, we really appreciate your time.
Yeah.
No, just to that point, I'll leave you this one point. So I say that if you're given the privilege to speak, and I appreciate the privilege to be with you guys this morning, if you say things that people already know or already agree with, you're kind of wasting everybody's time. You should say things that you believe strongly that maybe elicit some conversation. And I don't necessarily need or want everyone to agree with me. What I want them to do is debate and discuss and have discourse with me. And maybe I'll change my mind. Maybe I'll change their mind. But we can't do anything if we all just repeat what we all already know. So I appreciate your show because it does let people come on and say things that are meaningful and they really believe.
All right, Mark Yusko is the CEO and CIO of Morgan Creek Capital Management. Mark, thank you so much for the time today, and have a good rest of your day.
Thanks, guys. You too. See you.
All right.
Thanks, Mark.
All right, that one went way longer than I thought.
Yeah, that's okay.
It was
Lots of good arguments. I mean, I don't know if I'm selling all my stocks and going to buy Bitcoin.
I don't know about that.
He got me thinking. He's got me scared.
All right. But real quick, though, I do want to move on, though, because we have a couple minutes left in our show, and we had a debate on the pre-market show about when is the market open? When you say, the market's up X percent today or down Y percent today, since when, right? And you guys couldn't really come. You guys were debating.
This is the argument with the S&P futures, right? So, I use SPY. I stopped subscribing to S&P futures quotes 10 years ago because I don't want to pay as a professional with Bright Trading. It cost me like $700 a month to get futures quotes. It's ridiculous. So I know, if you're a retail, you can get it for like $5 or $10. You can get it cheaper. I can't get it that cheap. They'll even hunt you down. You have a retail account, they'll hunt you down and say, no, you're a prop. So even if you have a retail account, you're using quotes in there that no, you got to pay the full price. They'll hunt you down. So anyways, CME wants their money. They want, to charge ridiculous amount of money for market data now. And the CME wants to charge $600 or $700 professional for S&P futures quotes. I'm like, I don't need them because you know why? I have SPY and the SPY. So the only time I don't have futures quotes is between 8 p.m. and 4 a.m. because SPY is closed during that time. But the actual market, the confusing thing about, futures is they always have to adjust. You'll see this on CNBC. Fair value. What's fair value? SPY never has to adjust for fair value because SPY's closes at 4 o'clock with the stocks. But the S&P futures continue to trade, obviously, around the clock. There isn't an official close. SPY continues to trade too, but the official close is not at 4 o'clock when the stocks are closed. It's at a different time. And we were arguing this morning. It obviously they trade till 4:15. Then they have the pause, and then they reopen at 4:30. Then they close again at 5:15, and then they reopen at 6. So you got open, close, open, close, open, close. So Mr. Elconin, enlighten us. When is the actual open for the futures, and when is the close? So the official open is the 6 o'clock.
Yes, sir. Yes, sir. There's the official close, like today's trading, Wednesday, May 29th. That trading will end. The closing price is at 4:15 Eastern Standard Time.
And I would think the original opening price would be 4:30 because
today, 4:15 today. Then it shuts down between 4:15 and 4:30.
Yep.
Then they reopen at 4:30. This is all Eastern time from 4:30 to 5. That does not affect the high and low of the day. It is,
which is confusing as hell that they do all these opens and closes on the futures.
And then they're closed for an hour. All right. And then the reason I wasn't watching the markets at the end of the day and after hours yesterday, and when I'm looking at the spoof, it closed at 05.5 or 05 even, opened 04.25 and ticked 06. So the 6 p.m., to answer your question, the opening for Wednesday's trading was 6 p.m. Tuesday.
So this trading that happens between 4:30 and 5 o'clock, or is it 5 o'clock? I always thought it was 5:15.
It's 5.
So this half an hour of trading that between 4:30 and 5 o'clock, because the official close is 4:15, but the official open is 6. So what about the trading that's between 4:30 and 5? What's that all like? Where does that get applied? It has to be applied to one day or the other day.
This
is the confusing thing.
It actually will on some systems it will reflect that in the high in the low for the actual future, for the day. I'm not sure, when did we hit 0050 yesterday, because this might be a good example.
I don't know. I don't subscribe to futures quotes. I only look at SPY.
Okay. It whenever we end up at 5 o'clock, like let's say we drop 5 handles from the close and at 2,800, it will still show the close reflect the 415 price, no matter what.
So 415 is still the official close. It's so confusing that they operate in this way, and they never used to do this. Years ago, when I subscribed to futures quotes, 415 was the close. They reopened at 4:30, and then they just ran. But now they've decided they want to close for another hour for maintenance between like 5 and 6 o'clock. So, open and close, open and close. Decide whether you're open, decide whether you're closed. SPY is open from 4 a.m. in the morning till 8 p.m. It's closed for those other 8 hours. That's why, and the SPY is nice because you don't have to adjust for fair value, because the official close is at 4 o'clock with the stocks. And the reason they're doing this adjustment is because you have the 415, so it's trading for 15 minutes afterwards. So the futures time that is actually the official close is 15 minutes after the stocks. That's why I have to do all these fancy fair value calculations to figure out whether we're really up or down in the market. SPY is just a superior tool. The downside is that it is closed for those 8 hours. So the only time that I really need SPY, the only time I really need the futures is between 8 p.m. and 4 a.m. when SPY is closed. So, that's the only time. And I look at my CNBC app and I kind of look, or there's online sites too that give it to you free too. But if I officially subscribe to one of these as a prop trader, they're going to hit me with like $600 or $700 a month. And I was like, forget that, because SPY is actually superior for all those hours except when it's closed from 8 p.m. to 4 a.m.
You can trade the spider at night, get a Thinkorswim account. Man,
and that's funny too, that they do round the clock. So at SPY, and I don't have a Thinkorswim account, but if I did, I would imagine how the market makers are doing it. Let's say S&P futures are down 1%. We'll use an easy example. S&P futures are down 1%. Well, if they can short SPY to you down 0.5% or buy SPY from you down 1.5%, then they can make 0.5% on you. So they'll make a market all day long. I'm sure they make it a little bit tighter than that.
Here, Dennis,
but the market makers are making money off of you. Don't
I've got the overnight chart up. If you look at the screen, I've got a paper.
Yeah, you have the Thinkorswim round the clock SPY trades on there.
Yeah, well, I've got a paper account with TOS here.
Was there some trades last night?
Yeah. So you can see
between 8 p.m. and 4 a.m.
Yes. So this is a 1 minute chart I'm looking at. So right where my cursor is, all these trades here. This is 3 a.m., 2 a.m., 1 a.m., midnight. This line here is midnight, and then all these.
Can we get the S&P futures chart on top of that?
No.
Well, we'll figure that out, how to put that on top.
Actually, we probably can, but not.
Would be, okay. So maybe tomorrow we could put that on top of that and see. But I would imagine, the market makers are just it's like the high frequency market maker. They're going to surround where the S&P futures are, because the SPY is actually closed. So if they're making a market in SPY, they're just using the S&P futures to do it. So, which is smart. I mean, that's really smart by TD Ameritrade to do that. And it is a service. I mean, but if you're coming here and you're going to buy SPY, they're probably going to make that little fraction of a percent on you, because they're giving you that market at 3 o'clock in the morning, when you can just probably go and do the futures if you really want to trade at those hours. The futures is actually trading. So, and I'm sure on the stocks that they're doing it around those fair values too, just calculating it out how we talk about it on the show and figuring it out that way. So the market makers are just using S&P futures to quote the SPY after that SPY is officially closed. That's how they're doing it.
All right. Great chat. I wanted to squeeze it in before we wrapped up today, because we had a debate this morning about that. So I hope we clear that up. I hope we didn't confuse you.
Well, it confused me a little bit more, but Interesting conversation.
Sorry if we confuse you more. I was trying to answer some questions. I hope we answered some questions if you had them. On that note, that'll be it for today's show. Want to remind you about the Benzinga Trading Summit. If an hour of Joel and Dennis is not enough in a given day, you can hang out with them for as long as you'll tolerate being around them. June 20th, New York City, Benzinga Trading Summit. They will be there along with Todd Gordon and Anne-Marie Band, Jeremy Newsom, Kenny Glick, dropping knowledge on their trading strategies. If you go to bzprofit.com, enter the promo code PMP15, all caps, PMP15, gets you 15% off your ticket to the Benzinga Trading Summit. Thanks to today's guest, Mark Yusko. Thanks to all of you in our chat. Please remember, all the information on our show is for informational purposes and not meant to be investing advice. On that note, everyone have a good rest of your day.
One more thing.
One more thing.
Do you think we're going to get in trouble in the trading room because we're going to be so loud and screaming and yelling and everything? And Dennis and I going to be arguing. Do you think they're going to come in and tell us that we got to
probably kick us out?
Who's they?
Who's they?
Who's they? Who's going to yell at you?
The Benzinga moderators.
The Benzinga moderator. Maybe. I don't know.
We're the moderators.
Yeah, you are the moderators. Okay.
Oh, we are the moderators.
All right. Oh, man. All right. On that note, everyone.
I'm going to kick Joel out, and Joel's going to kick me out because we'll be arguing about, some stock or something.
Exactly.
Chart.
All right. Everyone have a good day. We will see you on Thursday.